Here is our host, Tian Wei.
Hello and welcome to World Insight. I'm Tian Wei from Beijing. The China International Fair for Trade in Services begins Thursday in Beijing. This year, participants from more than 150 countries and regions are attending the global fair online or in person. The fair is seen as a platform for China to showcase the growth of its service sector, which accounts for over 50% of GDP. While the recovery of traditional manufacturing has been hindered with a resurgent pandemic, trade in services, though, has gathered momentum worldwide. The Chinese Ministry of Commerce said the country's overall trade in services rose 6.7% year-on-year to nearly 2.4 trillion yuan in the very first half of the year 2021. Chinese President Xi Jinping kicked off the global fair with these words.
Trading services is a key component of international trade and an important area of economic and trade cooperation between countries. It has a big role to play in fostering a new development paradigm. We will work with all other parties to uphold openness, cooperation, mutual benefit, and win-win, share opportunities in the growth of services trade, and promote world economic recovery and growth. We will open up at a higher level by implementing across the country a negative list for cross-border services trade, and by exploring the development of national demonstration zones for the innovative development of trading services. We will create more possibilities for cooperation by scaling up support for the growth of the services sector in Belt and Road partner countries, and by sharing China's technological achievements with the rest of the world. We will further improve rules for the services sector by supporting Beijing and other localities in piloting the alignment of domestic rules with the ones in high-standard international free trade agreements, and in building demonstration zones of digital trade. We will continue to support the innovation-driven development of small and medium-sized enterprises by deepening the reform of the new Third Board and setting up a Beijing Stock Exchange as the primary platform serving innovation-oriented SMEs.
Well, in New York, Jim Rogers, world-renowned investor and author, joining us. In Beijing, Liu Baocheng, the Dean of the Center for International Business Ethics from University of International Business and Economics. And in Brussels, Daniel Grohl, a member of the board and a distinguished fellow at the Center for European Policy Studies. Gentlemen, welcome to the program. A lot of new information coming out from the Chinese president at the ongoing Chinese trade fair on service trade. Among them, I'll just go very quickly, which we already illustrated in details earlier with that quote. One is about the negative list. The other is about building the mechanism through Belt and Road. The third is about trying to meet the standards of higher international trade agreement. Fourth is about establishing more Third Board, this time Beijing Stock Exchange. So a lot of new information to you, Mr. Rogers, as investor. Which one more crucial?
Well, they all sound exciting to me, especially a new stock exchange for innovative companies. That's great. The more money you can raise for innovators and entrepreneurs, the better any country, any society, any economy is. But Tian Wei, Belt and Road is very exciting too. That's one of the most exciting things in the 21st century.
To you, what about among all the list, Mr. Grohl, which one?
I think from a practical point of view for the European Union, of course, this negative list approach is the one that makes most sense. China is a huge market potentially for services. And if one could reach an agreement also in the multilateral framework on a negative list, that would be a major step.
All right. Professor Liu, you have a different choice?
I'm left with no choice but the globalized rules that are compatible to international standard. I think it is really referring to the general agreement on trade in services under WTO, and now the RCEP, particularly the e-commerce chapter that is there to be implemented by the end of the year.
But we noticed the Chinese president did not reveal any specific time. Of course, it was much more specific job of those in the Chinese government to illustrate that. But when you look at what's going on right now, particularly, Mr. Rogers, with the encouragement of investing in service trade in the health sector and also in the financial sector, without mentioning other sector, entertainment and high tech, is it interesting to you?
Tianwei, nearly everything in China is of interest to me. As if China continues to open up, China is going to be the most important country in the 21st century. I mean, if they close off, then there'll be a problem again. But no, so far, everything is great opportunity for all of us.
I do read a little bit from your answer, Mr. Rogers, though, that you seem to suggest China don't close up. It seems that what you're trying to say. Professor Liu, you want to respond to that?
Yeah, this is the most fundamental one because China benefited over the last 40 years from continuing opening wider of the Chinese door, and it is now there to dismantle some of the walls that are still blocking over there. So the introduction of negative list and the continued connection with the higher level standard of service trade is really an elevation of the Chinese commitment and the resolve to further on this road.
Okay, Mr. Guo, how attractive still China is?
Well, for European investors, China is the one big market in the world which grows. Europe grows very little. Our markets are stagnant almost, whereas in China many things are moving. The first thing which was opened up was trade in goods, industry, and now the logical next step would be services.
Yeah. Let's see some of the specifics. Probably the Beijing Stock Exchange is one of the things that catches everybody's eyes. Mr. Rogers, we've already known that in China, several boards. In Shanghai, they got two, Shanghai Stock Exchange and then also the Shanghai Star. And then you have Shenzhen as well, both the Shenzhen Stock Exchange and that for the, the high-tech enterprises. And you also have in Hong Kong, they also have one, Hong Kong Stock Exchange and one for the high-tech companies all over the world. And now Beijing is going to have one. So you see all of this interesting development and certainly competition. What would that mean?
Well, competition and opening up is always good, especially if you're talking about capital for entrepreneurs and new businesses and innovators. That is fantastic. Look out the window. You see what China's done in the last 40 years. That's because they did have capital and access to new ideas, and that's fabulous. Tianwei, once upon a time, America probably had 8 or 10 stock exchanges. We were a much smaller country and a much smaller economy. Now we only have 2 stock exchanges, but this is a normal process when companies or countries are developing, which China is. The more the merrier, the better. Let us all have lots of money to access and to help entrepreneurs develop new ideas,
well,
which
Mr.
China
Rogers,
so far is doing. Let's hope they continue.
I know, Mr. Rogers, you want to be upbeat in the program, but what does that mean, the competition within the country? Also with the thought that, these days, Chinese enterprises, particularly high-tech enterprises, going to stock exchanges in Europe and America particularly is becoming extremely difficult and challenging. So more stock exchanges within China for Chinese companies and international ones. Very interesting idea, isn't it, Mr. Rogers?
It's fabulous ideas. I said America once upon a time had 8 or 10 stock exchanges, much smaller country. Now, Chenwei, when I talked about closing off, it's not good for China to close off, but America, look, America's showing signs of closing off too. If the world closes off, we're going to have problems. If everybody continues open and engaging with each other, then we can have opportunities.
Mr. Guo?
I think Europe shows the opposite danger. In Europe, we have 27 stock exchanges, and that's really too many. So I think Mr. Rogers is right. A couple of stock exchanges which compete is good, but it shouldn't be too many.
And how do you see the potential of Beijing's possible NEDQ? It's called the National Equities and Development Quotations.
I must say, is it really a task of a government to decide where a stock exchange should be located? Maybe one should have left that to the specialists, to the investors, maybe the high-tech entrepreneurs. Whether Beijing is a good place or Shanghai or Shenzhen, I really don't know.
You do see a lot of competition among China's metropolitan cities, Professor Liu, in developing finance industry and also service trade.
Yes, I think now, we have 3 growth centers. The Pearl River Delta area represented, supported by the Shenzhen Stock Exchange, and the Yangtze River Delta area supported by the finance from the Shanghai Stock Exchange. Now, with the integration of Hebei, Tianjin, and Beijing, we do need another pool of capital that supports this polar of growth. So that's one point. The other is that if you look at the past 20 years, China really evolved from the single type of factory on incremental growth, and now by combining capital with the manufacturer and now the high-tech manufacturer, then you can really go for explosive growth. But one thing we have to caution, and that if we build up too many financial platforms without translating into real productivity, and that's a danger, and that's the danger the government is getting very much alert, as to Ant Financial and other type of big platforms. So now the Beijing one is really targeting to raise those hidden champions who may handle only one IP, and then make a special parts that's fitted for high-level manufacture, and that's the one I think the Beijing Stock Exchange is really catered to support.
Okay, another point, very important, also about how to align China's rules and regulations with the so-called higher standards of international free trade agreement. That's very interesting to me, because you see, Mr. Guo, the discussion and debate going on at WTO about where the future is. You also see the flourishing of regional platforms, since the international one, global one, is not functioning as well as it did. And now China also talking about, after entry into the WTO, 20 years this year, where is it going? So this catering to the higher standards of international free trade agreement, to me, very interesting. What about to you? What does that say?
Or aligning the internal rules and regulations to WTO standards or the global standards is always a key step in integrating your economy into the global economy. And I think that's a very important step. And now it is happening in services, which is always the most difficult part to integrate, because in services you have a lot of domestic rules and regulations, domestic customs, and also domestic interest groups, which do not want to have this change in the rules. We have experienced that in Europe, even across European countries, it's sometimes difficult to trade in services. So if China really were to align its own service regulation with global standards, that would be a very major step ahead.
Of course, the timeline of this is not clear, Professor Liu, at this point, though.
Yeah, it is a very complex one, because China was rather cautious. Before it was only open for trading goods, and then we ushered in the joint ventures with approval system, and now the service sector. First of all, where is the border for its definition. For example, within gas, education is part of the service, but now China would take it more as ideological construct. So we have to define that. The other is that right now, because China by itself, the service takes 56% of the entire GDP. So therefore, it is time for China to consolidate within its own border with the right type of standard, and then to match the global standard. And that's something that we are also be able to work with the Belt and Road countries, which President Xi mentioned to a great deal.
All right. Since Mr. Rogers today, you pretty much to me has been a one-liner, so I want you to have the final say and also the final share of insights for this discussion. Mr. Rogers?
If China continues to open up and adopts international standards so that international investors and customers know that everything is legitimate and honest, China's going to be the next great country in the world, Chen Wei. You should teach your children Chinese.
Well, you did. Good for them. We also want to learn English as well. Jim Rogers, Danny Guo, Liu Baocheng. Gentlemen, thank you so much. Say hi to them, to your children and your family. Thank you, and be healthy. Thank you.